Okay, guys. Good evening, good morning, good afternoon, depending on any time you come across this video. Okay. Um. Sorry it took so long to make this video. I've been working on some things. I've been so occupied lately, so I just had to create time and record this video. You understand? Record this video. So now, um, what we have today is the basic package structure. I'm still going to send the content on what I'm going to deal with. You understand? On what I'm going to deal on. But basically, I'm not meant to start with this basic market structure. I was meant to start with the basic trading strategy like candlestick pattern, chart patterns, and all that trend line strategy, trend line breakouts. Those are important, but I just want to start with this basic market structure, then maybe go back there, go back to the candlestick pattern and chart patterns and all that before I now continue with the advanced market structure. I hope that's okay with you guys. So now let's start. Okay, my name is Axel, and I'm going to deal in on the basic market structure. Okay, now what I'm going to deal on is the basic market structure, understanding basic market structure, types of basic market structure, identifying basic market structure, the impulsive and retracement move, the pullbacks, mapping out a BOS and a change of character, break of structure and change of character, and the structure fit and all that. Okay, let's get to what we have. Now, what do we have here? What do we have here? Now we have understanding market structure. Okay, what is market structure all about? So you've been hearing market structure, right? Now, market structure skill, you understand? Market structure skill allows you to use the right price action strategy in the right market condition. Market structure allows you to study the movement of market. That's the basic meaning or the basic reason why market structure is important. Market structure allows you to study the movement of the market, and that's it. You understand? When someone asks you, do you trade structure? You'll be like, I trade structure. Why? To study the movement of markets, right? Now, if you can't study movement of markets, you can't predict whether the market is going to buy or sell. So that's why the basic market structure is very important. It should be the foundation for every trader. You understand? But some traders do jump into ICT and other strategies without understanding the foundation. You understand? But let's not go into that. Okay. What does market structure help you to understand? All right. Now, market structure helps you to identify what the crowds are doing. You should know that there are a lot of people trying to make money from this forex market. You understand? There are a lot of people. So you should understand that market structure helps you to understand what the crowds are doing, right? Now, who is in control of the market, the buyers or the seller? Market structure helps you to understand whether the market is buying, whether the market is selling, or whether the buyers are in control or the sellers, right? And then market structure helps you to know the time you enter the market, leave or stay away from the market. There's some markets you analyze and gives you a setup and you make a trade. And there's some markets you stay away from. Why? Because it's not printing your setup like a consolidation market, right? Now, that's what a disciplined trader should know. When the market is not giving you your setup, you should stay away from the market. Don't try to force the market because the market will react. The market will act for you to react, right? So you just have to wait for the market to give you something before you enter. That makes you a trader, right? Now let's get to the thing. Now we have the basic market structure. The basic market structure is what? We have the bullish market structure and the bearish market structure and the consolidation. So we have basically three types of market structure, right? Okay, I think I'll be making some illustration here. Making some illustration. All right. Okay, now, basically we have what? Or we have this kind of market structure. Okay, now this is the first market structure, type of market structure we have. This market structure, type of market structure is what's called the bullish MS. We will speak like that. The bullish MS, right? Now, when you when you say that a market is buying or the market is bullish, this is what you mean. The market is buying. You understand? When the market is printing a series of a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. You will say that this market is what? Bullish. And for this market to be bullish, this market needs to give you what? Needs to break the previous high, right? Needs to break the previous high. But I'm still getting to that. So I just want to, just want to understand what a bullish market is all about. Now, when it comes to this, is what a bullish market looks like. You understand? This is what a bullish market looks like. Now, okay, okay, sorry, guys. Right, okay. And now, this is what we have the second type of market structure. We have the bearish market structure, right? The bearish market structure, and this is it. This is what a bearish market structure looks like. You understand? This is what a bearish market structure looks like. And I guess you understand what how to identify what the basic market structure looks like, the bearish and bullish. Then we have the consolidation. This is what a consolidation market looks like. Or some people call it choppy market, but I call it consolidation. Consolidation. The consolidation market is the kind of market that is just printing a series of high and low within a range. Some people call it a ranging market too. You understand? This is what it looks like. Now, this type of market is just trading within this range, right? And just trading within this range. We call this kind of market a ranging market or a consolidation market. You understand? It's not advisable to take this kind of trade, right? Because the market is not printing anything to you. It's not printing bullish or bearish. So I advise you to stay away from this kind of market when you are the seeded, right? Okay. Let's get to the next thing. I think I'm going to make this video short, but let's keep going. All right. What do we have here? Now identifying basic market structure. Now, how to identify basic market structure? Okay. Firstly, how to identify a bullish market structure? A bullish market is a higher high and a higher low, right? Now let's get to it. Here's what I mean. Here's what I mean. When you when you when you want to say that okay, this market is bullish, it should give you something like this. The first, okay, Sorry, I think this is not clear. Okay, this is what um a bullish structure look like. Now, for you to say that this market is bullish, the market needs to print for you a higher high and a higher low, a higher high and a higher low, a higher high and a higher low. You can't say that this market is something like this. Price, sorry, you can't say that this is a bullish market. Something like this. You understand? A market like this, you can't say that this market is bullish, right? This market is just consolidating, giving you no clear reaction or no clear trend. But when a trend price gives you something like this, the first move, second move, breaks the previous move, protects the previous low, breaks the previous move, protect the previous low, breaks it, protect it, breaks it, protect it, breaks it. You understand? For a higher low to be confirmed, it should break the previous high. And for a higher low to be confirmed, you should break the previous high, right? Now, then, for you to say that this market is also bullish, the- these lows must be protected. These lows must be protected. Lows must be protected. They must be protected. If no one price breaks two lows or three lows, you consider it as a bullish market, right? Now let's get to the bearish market. You can see what a bearish market looks like. This is what a bearish market looks like. Now we have this. We have this, 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 and this, and this, and this, and this. So this is what a bearish market looks like. It should be able to what? To take out the previous low, and the previous lower high should be protected. The previous lower high should be protected, and the previous lower low should be taken, right? So this is what it means for a market to be bearish. You understand? So it's just a simple algorithm. Now let's get to the charts. Because think let's get to the charts. Okay, you can see that this market has been what? This market has been what? Bearish. Why? Because what? Price printed what? A higher high, right? Price came here. So a lower high. Price came here. Brook structure, right? Right? Yes. Price came here. A lower high. Price came here. A lower low. Brook structure, right? Price brook structure. You can see how price has been printing a higher high and a lower low. You can see it. Price came here. Did something like this. Broke. Came here. Broke. Came here. Broke. Came here. So you can see that market is on a sell. Is selling, right? So this market is what? A bearish market. Now let me look for a clear a clear bullish market. Okay. You can see that market is bullish, right? You can see that market is bullish. You have something like this. Now, this is what it looks like. When you see something like this, you look for buy positions. And when you see that the market is saying you look for sell positions, never you trade against the trend. Always obey the trend, right? So never you trade against the trend. When you see the market is buying, look for buying opportunities. And when you see the market is selling, look for selling opportunities. Right? Okay, sure.